Reserve rights has just become a top 100 cryptocurrency, now ranked at number 98. The price has doubled since May. However, the market cap has gone up by 5 times. So today we're going to look at the disparity of the two and why, but we're also going to look at the recent price action and what you should anticipate next. So if you like today's video, like, subscribe, hit the bell notification. Let's dive straight into reserve rights. Now, without a shadow of a doubt, this project is big. It's got eyeballs. So at a high level, on their website, you'll see it's all about stable coins. Imagine a stable universe currency, and they're doing some really, really good work. And I was just checking out on a high level, they're investors. And when they're backed by Coinbase Ventures, you want to take notice. Peter Thiel, he's a big deal. He's the guy behind PayPal along with Elon Musk. He wrote the book 0 to 1. So it's a big project. And today we're going to focus on price action. And we want to know that markets are driven by fear and greed, buying and selling behavior by the big boys, but also with retail investors. And what we're going to cover, a couple of things today, because it's hard to see unless you've got the trained eye. Markets move in 5s and 3s. And it looks like we've got this big 3-wave correction over here. So this could be the end of a correction to see a nice continuation to the upside. That's what we're going to look at. We're going to look at this price action, what that is really telling us as well. But really, it's the market cap. There's something that's not quite hanging together that you might not be aware of. And I just want to go into it in a bit of detail today. And by the way, if you want to learn how to read the markets, not only for reserve rights, but for Bitcoin, for Ethereum, for all markets, I've now created my 4 Secrets Crypto Trading Masterclass, which will teach you how to be ahead of the market, identify the trend, and then ride that trend. And we're going to come back to some of this price action, but this is free and it's in the description link below. So I'm going to go to CoinMarketCap for reserve rights, right? So just a couple of bits of information when we're looking at this. Quite exciting in the sense of it's now a top 100 cryptocurrency. It was 106 around a week ago because my community was asking me to look at this, and we're just having a good look. The price has doubled since May. We're going to look at that as well. Market cap is 333 million. Max circulating supply is 100 billion coins, and currently 42 billion in circulation. But there's something that you might not be aware of, and sometimes it's a bit annoying if you don't notice this. And it can be. I've been caught out with this in the past. What I want you to pay attention to is if we look at the price on, let's call it May, right? May 19th, May 14th, it was 0.004, right? So if I pull up a calculator and I just type in 0.004, that was the price on May 14th. And today's price is around 0.008, right? Just below that at the moment, 0.008. So that's a 2x, right? 2x in price since May. And more recently, it's probably been like a 30% increase last few days, etc. That's 200%. But now what I want you to look at, because it can be frustrating, because you should have got maybe a higher return in your price action. If you just look at this piece of information, what we're going to go onto is the market cap. So I'm going to click on the market cap tab and look how much the market cap has increased by since the same time span. And we're going to look at the reasons of why and tokenomics, some of the basics on tokenomics that you want to be aware of. It's gone from market cap of, let's just call it 67 million. Let's just call it 70 million, right? So we call it 70 million. And today's market cap is 333, right? So we've got 333 million. Let's just round it up, right? 33 divided by, well, let's just be accurate, 67 million. So the market cap has gone up 4.9 times, basically 5 times, right? So I got a degree in mathematics, right? My background used to be a math teacher. I used to teach back in the day, just, statistics, but this is just basic math. So if we just look at this and we go, okay, from this point here, if I just make it red, from this point here to this point here, the market cap has gone up dramatically by 5x. Yeah? But then when we're looking at the price action, the price has gone up nowhere in comparison. When we're looking at this, if I just get rid of this over here, the price has gone up by, and if I just change the color, let's just change it to green. It's gone from here, and it's currently here, so it's gone up, but the price has gone up 2x. Go, well, how come? How come? Well, the only conclusion with this is I don't know their token release schedule, but the circulating supply it probably has increased by a certain amount. So in other words, the current circulating supply is 42 billion, and over the last few months, I can only gather that there's been a lot of new tokens in circulation. So if the price stays stable and there's new tokens in circulation, it means that the market cap's going to go up, but the price is going to be suppressed. So you just want to be aware of that as well, because ideally, if you're holding reserve rights token and the market cap goes up by 5x, you want the price of the token to go up by 5x also, so you can have that gain. But here, the market cap's gone up by 5x, but the price is only gone up 2x. So just want to keep that in mind and be aware of that as well. So often when I'm looking at charts on CoinMarketCap, I just want to have a quick look at, does the price and the market cap, do they follow? And to date it has, but the recent last few months, you can see that the market cap, again, if you just put your eyeballs onto this part over here, you can see that the price has gone up, but it's been more sideways to down, where the market cap has almost exploded to the upside, and hence has become a top 100 cryptocurrency, but without the price moving that much. So just want to, just bring that to your attention. All right, so what we're going to do next is we're going to go back to price action, now recent price data. So I'm going to go to an hourly chart. So there's a couple of things I want to bring to your attention when we're looking at price action. We're going to look at this over here. Really going to focus on this part of the market. We're going to be aware of the momentum indicator. We're going to be aware of this, that we're going to anticipate sideways to down for a few days with reserve rights. I'm going to show you why. So what we're looking at now is purely technicals, buying and selling behavior. Do we see any patterns? Right here, there's not that much of a clear pattern, but when we drop down to a 60-minute chart, a 1-hour chart, what we can see over here is, remember what I said at the beginning, markets move in 5s and 3s. And what we're looking for is a 5-wave pattern. And if we spot a 5-wave pattern, that gives us a big clue that we might be coming towards the end of a local trend. Because when it comes towards a 5 like this, so you're looking at a 1, 2, 3, 4, and then a 5, markets represent these patterns all the time. And 40 to 60% of the time, they're really, really clear. What typically follows is some type of 3-wave correction. And we're going to look at that as well. So when I'm looking at reserve rights, the local price action, the recent price action, if we just get rid of this indicator, you can use bar data. I normally use bar data, but sometimes it's a bit easier to see on closing data here on the 1-hour chart, is do you see any 5-wave structure? Well, what I'm seeing over here is an initial move up. We got a pullback. This explosive move up over here, we call that a wave 3. An irregular ABC, that's quite common for a wave 4. And then another explosion to the wave up. So I'm looking at seeing a nice 5-wave structure. Now, I would always put a question mark here because it's not confirmed that this is complete. However, it's likely. I'm going to do a couple of other ratios as well just to help us out. And then we're going to do a bit of forecasting. Forecasting in the sense of what should you anticipate? Is now the right time to buy reserve rights? I don't think so. One of the reasons is the daily momentum. Again, I'm just going to pull it up over here. The daily momentum is an indicator that indicates the rate of change. And it's a lagging indicator, but it gives us a good indication that we should, when the blue and the red lines at the top part, it's called overbought. And it just indicates to us that the price is likely to go through some type of correction over the next few days. Right? That's what it indicates to us. And we can use that information. And what I would do with the indicator is wait for it to be below this black line, cross over, and when it's now pointing up, that would be a better time to buy, to stack the odds in your favor that the price action is going to move up. But we want to combine that with some of the other things that we're going to talk about today. And by the way, I'm going relatively high level today, relatively high level. So if you're finding this a bit advanced, I've actually got my 4 Secrets Crypto Trading Masterclass that breaks this down in layman's terms. So you will have a different set of glasses when you're looking at the market because you'll see different things. And what we're looking to do is stack the odds in our favor, identify chart patterns with a leading indication in terms of what's likely to happen next. And then you can plan and prepare in advance when to take profit, when to delay your buying behavior. If you're shorting the market, going long in the market, profit-taking strategies, and so on and so forth. So I highly encourage this. It's absolutely free. The link is in the description below. But what we're going to do over here now, we have to make an assumption, which is, let's just say this is the top. What other factors would indicate to us that this is likely to be a top? Well, there's a couple of things. So I'm going to do something called Fibonacci price ratios. I'm going to do it relatively fast. I won't go over the details. I go over the details in the masterclass itself. But there's common ratios for end of wave fives, right? And that's what we want to be aware of. I'm just going to quickly see. I haven't done this yet. I'm just going to quickly do it from here. There's a particular ratio that these waves, so it's quite common. So you see it's 38.2%, this ratio here. That's quite common for an end of wave five. And then also, if we just take the closing extremes over here, this is called an external retracement. And again, these are quite common for end of wave five. So now we've got something called Fibonacci price cluster. We've got the daily momentum indicating if you should be sideways to down. And we've got a 5-wave pattern position saying that we are likely to be at a local trend. This is hourly data, right? So we're not talking about anything massive over here. Keep it in mind when we zoom out, the price action with reserve rights has been like this. So it's the biggest move to the upside, but it's quite impulsive. So this is what you call a particular pattern that says, look, there's a lot of buying behavior. But the caveat is, going back to CoinMarketCap, look at how bullish the market cap has gone up. It's gone up 5x, right? This over here. However, the price has only gone up like 2x, right? Since in the same amount of time. So you just want to be aware of that. I don't know what their token release schedule is over the coming weeks, months, and years. But if it's quite aggressive, then that's going to suppress the price. And if you're, buying this to basically make profits, that will make an impact on the price action. But let's just put that for us to the side for a second. Let's just, again, assume that this is the top. We've got a question mark here saying we need confirmation. What would be a good confirmation? Well, the price going below this swing low. That would be a good confirmation that the 5-wave move to the upside is complete. But for now, let's just make that assumption so that we can see what's likely to occur next. So again, the main thing that you want to get from today is crowd psychology. Markets are driven by fear and greed, human emotions, big boys, small boys, retail. It's all baked in to the price. And when you see a 5-wave move to the upside like this, normally what occurs is some type of correction. And that's referred to as a retest of the beginning of the trend. What do I mean by that? So we're talking about some type of retest. What are we retesting? We're retesting this, believe it or not. And there's typical retracement levels. So the most common, most basic is 50, 62, and 78.6% retracements. Right, these are the three ranges. I'm going to keep it quite simple today. I say simple. Everything is difficult before it's easy. That's just the nature of life. But these are the basic retracement levels, Fibonacci ratios, measuring buying and selling behavior. That's what we're doing over here. And then there's also a time ratio, believe it or not. That is almost like the markets need a certain amount of time to recover. And the way I like to think about this is that the market's done a sprint. Usain Bolt's done a sprint, it's run out of breath, and it needs to recover. It needs to pay off the oxygen debt, which means there's lactic acid in the muscle, and it needs to recover from that. So it's the breather, also known as a correction. And there's a certain time element that's required for this. And I cover this in a bit more detail in the masterclass itself, but the basic is the basic time retracement, almost exactly the same as we did the price, is 38 to 62%. Right, so what I mean by that is this over here is the most common, typical buying and selling behavior, and the odds state, like literally the probability state, that now that the 5-wave structure is in play, we've got the momentum pointing down on the daily, we have a Fibonacci ratio on the upside. More often than not, we'll get some type of A, B, C correction. That's really, really common. As it unfolds, and if it unfolds like this, we can do some more detailed analysis. But what to also keep in mind, after this kind of sequence, if this does, and it is an if, right? Because there's no guarantees in this game. It's probabilities, never certainty. So we really are forecasting here, but it's to anticipate what would you like to do based on this information? It could explode to the upside, but probability-wise, this is likely to occur. But what will tend to occur if it happens like this is then the market will continue to the upside. The only concern I have, if you can find out the information, I don't have the information, I haven't looked into it in any great depth, is the tokenomics. What is their token release schedule? Like, is it aggressive over the coming days and weeks? Are they, unlocking tokens for particular reasons and flooding the market? And even though the market cap might go up by another 2 times, so it might become a top 50 coin, the price might only go up by another 30%, depending on how many tokens are being issued into the market. So hopefully you found that helpful. So reserve rights is likely to be sideways to down for the coming few days, but this is what you want to be anticipating in the medium term, weeks and months ahead. And if you want to learn how to do this yourself, so you really can kind of see the method behind the madness, take my 4 Secrets Crypto Trading Masterclass. Is 100% free, but it will take your trading to the next level and just even your thinking when it comes to hodling in bear market conditions, bull market conditions, and a few other factors as well. So if you like today's video, like, subscribe, hit the bell notification. What do you think about reserve rights? Are you familiar with the tokenomics? If you are, post it in the comments. I can see that there's 42 billion in circulation, but what has been released over the last 4 or 5 months, that would be quite interesting to see, or if there's a link of finding that out. Right, we're going to finish on a quote from my book, The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro. We're going with Warren Buffett today, chapter 2. It's rule number 1, never lose money. Rule number 2, never forget rule number 1. Now, in the nature of investing, trading, taking a loss or taking drawdowns is just a cost of doing business, but we want to minimize that as well. So what I'm teaching you in the 4 Secrets Crypto Trading Masterclass is how we can stack the odds in our favor so we become the casino. So when we are doing buying and selling behavior, it's based on logic, it's based on mechanics, it's based on objectivity and not emotions. Because when you see the price take off, something called hopium kicks in, euphoria kicks in, greed kicks in, fear kicks in, and then people make, reckless decisions. Whereas you can take more control by and minimize the chances of losing money and maximizing your chances of making money, especially if you've got a nice profit-taking strategy in play as well. All right, so like, subscribe, hit the bell notification, check out the masterclass, and I'll see you soon.